if you're talking on this panel, do feel free to come up and join me on stage. Yeah. Thank you. Thank you. Emma, do we have New Zealand online? Aha, there we go. Hello again, everyone. I promised you an hour ago that we wouldn't be talking about first principles today, but based on what I've just heard, I think we still need to talk about them a bit, alongside all the other interesting things that central banks are doing. We've just also been reminded that they have a very difficult day job at the moment, and maybe that's difficult to reconcile with some of these. We'll explore these issues and others with an excellent panel. Joining us online, virtually. In fact, in your manifesto, Simone, there's talk about business travel. Perhaps we can come back to that. But Simone Roberts, Assistant Governor and General Manager, Strategy, Governance and Sustainability at the Reserve Bank of New Zealand. We have with us Chuchi Fonakia, Deputy Governor, Financial Supervision Sector at the Central Bank of the Philippines. We have Eric Boye, Manager, Product, Knowledge and Research at the World Bank Treasury. And we have Franco Panfili, who is Deputy Director General, Directorate General for Markets and Payment Systems at Banca d'Italia. So welcome everyone. We've just heard a mixture of some very concrete activities of central banks, but also a discussion actually of fundamental principles which seem to me not quite to have been resolved in many ways. I'd like to first ask each of you about the work streams that you're carrying out as central banks, not the World Bank, but as central banks, either in your portfolios or as bank supervisors. Obviously, both things are very important. So we'll go to each of you in turn, then we'll go on and explore all the issues. So, Simone, why don't we start with you, and also perhaps if you can talk a bit about your work in the NGFS. I promised not to use alphabet soup today, but we're going to have to. So starting with you, Simone.
Thanks very much. And look, thank you for the opportunity to participate in the discussion today. So just check you can hear me, John, is that
Yeah,
right?
maybe a shade louder if you can, but we can. Thank you.
Louder?
Yeah, great, thank you.
So look, thank you for the opportunity. So, I mean, Reserve Bank of New Zealand, we're a full-service central bank. We've got stability at the heart of our mandate. So stability in terms of monetary policy, but also in terms of the broader financial system, so financial stability. So anything, obviously, that challenges that financial stability and our economy is our core business. So, you know, as a society, we're reaching net zero by 2050 requires us all to think about the way our economy is organised. It's about changing those large-scale flows of capital, not just away from the carbon economy, but redirecting those capital flows into adaptations. So as a regulator and a supervisor across the financial system, and as New Zealand's central bank, the signals we send on readiness and our collective understanding on climate-related risks and what we're doing about it are crucially important. So our climate change strategy has three components. So the first is really just managing our own climate impacts, so getting our own house in order, if you like. The second is mainstreaming our climate considerations into our core functions, so getting those settings in place. And then the third is leading through collaboration, so showing the way. At the Reserve Bank in New Zealand, in our work to target climate change, we're currently focusing on a couple of key areas. So under getting our house in order, we've been reporting our full scope 1, 2 and 3 emissions since 2019. We recently set emissions reductions targets for our heat, electricity, waste, and business travel. We're working to address emissions not currently in our targets, such as currency production, currency freight, procurement, and a few others. We're also starting our own disclosures based on the Task Force for Climate-Related Financial Disclosures, so TCFD, which you've already covered this morning, I'm sure.
And Simone, perhaps you call all of those things
yes.
leading by example, I suppose, as an operation rather than as a central bank per se.
That's right. So that's right. And look, we can't ask our regulated entities to be doing all these things and upskilling and building their capability if we're not doing them ourselves. So that's really the stance we've taken there. And then on the supervisory toolkit side, we've built climate-related questions and topics into our standard supervisory toolkits. We're building our capability, but alongside our other fellow domestic regulators, as I'm sure is happening in Europe and the UK as well. And we've incorporated climate-related risks into our stress testing, which I'm sure we'll come to a little bit later. And then on the collaboration side, there's a range of ways we're doing this both internationally and domestically. We're a long way from many other jurisdictions, as you know, but the forum probably most familiar to those listening today is the NGFS, Network for Greening the Financial System. So we're co-chairing that obviously with Banco d'Italia, the work stream on net zero for central banks. So we're really thrilled to be helping out with that work stream. And again, Simone, 3 parts.
Perhaps we'll explore the NGFS in a little more detail a bit later.
Oh, perfect. Yeah, perfect. So we can come back to that. So look, I'm happy to leave it there, and we can talk about perhaps our involvement in the government and policy agencies here and policy setting here in New Zealand as well as we go on in the discussion. But thanks very much for the opportunity to make some introductory remarks.
Well, great to have you with us. I'd certainly like to explore your supervisory role as well. I think that's a super important component of leverage that central banks have where they are regulators. Franco, tell us about, you're obviously part of the Eurosystem like Portugal. Tell us about what Banca d'Italia is doing in this area.
Thank you. First of all, thank you for the invitation, and apologize for the level of my voice, but I caught a bit of cold yesterday. I think it's a confirmation that there is a big difference between London temperature and the Rome temperature, unfortunately. So apologize for the inconvenience. What we can say about our work streams. I think the Banca d'Italia tried to play an active role in sustainable finance through the various activity, the various function that the Banca d'Italia performed. So as investor, as a supervisor, as a monetary authority, and as a research institute for the bank. Our contribution include also public discussion and research that are based on internal analysis conducted to improve understanding and to raise the awareness about the importance of measuring and managing sustainability profiles. In particular, we try to get support for intermediaries, investors, and also policymakers in this area. Recently, in 2022, we decided to further boost our sustainability action and decided to set up a climate change and sustainability committee chaired by one member of the board. And at the same time, we set up a climate change and sustainability hub that is a sort of a core center for all sustainability activity of the bank. Just for giving some words about the different functions of the bank. As investor, we decided in 2019 to take sustainability profiles into consideration when making our investment process. And probably in the next other question, we try to do more details about that.
Perhaps, Franco, what might be helpful for those not familiar with the Eurosystem, what agency do you have that is distinct from the ECB? So where are you implementing ECB policy on ESG, and where do you have room for manoeuvre in your own jurisdiction?
I think we have to distinguish between our role as investment, where our margin of maneuver is quite larger, because the investment process is completely under our control and under our power. About supervision, of course, it's different, because because we have the duty of control and supervise the so-called less significant bank.
Yes.
And in this case, for example, the bank issued some supervisory expectation for this less significant
You haven't
banks.
got any SVBs in Italy, hopefully.
Exactly,
Yes.
exactly,
Okay.
exactly. Of course, it's perfectly in line with the same expectation taken by the single supervisory board
Yes.
at the ECB. So I think it's in terms of a monetary policy. Of course, we participate through the committees, through the governing council, to define also the greening monetary policy. Our Portuguese colleagues before, I think, detail in a very precise way which is this roadmap that I think is quite important. And in this sense, it's of course the monetary policy of the Union is a common a common power between all central banks around the
Of
Europe.
course, and Italy is also a key recipient of NGEU funds, which are aimed significantly at green projects. We won't spend time on that, but Italy has an important part of that story. We'll come back to that and other things in a moment. Chuchi, back to the other side of the world now. Of course, you're entirely sovereign over your own jurisdiction, but tell us what your work streams are in the Philippines.
Yeah, thank you. We thank, of course, FIF for this opportunity to also provide what's happening in that side of the world in Asia. Actually, we are all aware of the global call to action on as far as the climate change is concerned, and each of us would have a role to play, whether as monetary authorities, as supervisors, and even as individuals. And so we can actually contribute to this cause. And so on the part of the Bangko Sentral ng Pilipinas, the Central Bank of the Philippines, our response to that is our Sustainable Central Banking Program. And that program, adopted in 2019, is one actually of the strategic thrust of the central bank. And in developing and embracing central banking, sustainable central banking as a strategy, we are mindful of 2 points, in that first, it's really the primary responsibility of the national government, although that is not to say that the central bank can also play a role towards achieving, of course, the nationally determined goals. And second is that the role of the BSP in this space are actually still within the scope of our mandates, that of maintaining price and financial stability. So the strategies embedded in our Sustainable Central Banking Program features the central bank's role as enabler, mobilizer, and doer. Now, we were able to come up actually with 11 strategies, 11-point strategies and action points. And so as an enabler, we, of course, focus on issuing enabling regulations, and that our expectation of the banks, as well as other supervised institutions, is that they would embed sustainability principles in their risk governance and risk management system. For us in the BSP, we, of course, strive to embed these sustainability principles in the regulation as well as in supervisory tools, and that's with due regard to proportionality, the principle of proportionality. And that these enabling strategies would also include, of course, our collaborative arrangements with other regulators and with other supervisors in the region, and of course globally as well. And our role as a mobilizer is that we aspire to shape and change the behavior of our stakeholders, those within the sphere.
Tell us a little bit about how.
We aspire, because we really intentionally have the strategy of at the onset having these expectations from our supervised institutions, the banks, that they would have the buy-in. So we started off with high-level principles so that it would be a tone from the top for the supervised institutions, so that it will not be taken to be as just a sort of compliance, but rather they are really heavily invested in this endeavor. So that's the way we've been really very intentional as far as in the issuance of our regulations. So we would like to, of course, influence the behavior. And in turn, these banks would as well influence the behavior as well of their
of
borrowers.
Does that go as far, in your case, of leaning heavily on the banks via risk weights for brown assets and things like that? I mean, that's you can really apply pressure through that kind of thing, or are you more talking about culture?
It's really more of the culture, but this is not to say that we, of course, have started to conduct our vulnerability assessment, as well as on the transition risk, the physical risk, since Philippines is in the typhoon path. So we'd rather have that approach to be started and grounded first with the data, and then moving from there, we would maybe later on have some mandated, let's say, ratios. But at this point, we wanted this really to start off with the board and senior management having a buy-in first.
You're preparing potentially to act later, I think. So we'll explore that more in a moment. Eric, the World Bank, obviously not a central bank, and has played a material role in ESG finance from the beginning. It likes to be a groundbreaking institution at the Treasury, doesn't it? It likes to issue derivatives before everyone else, green bonds before everyone else, and so on. Tell us what the World Bank is doing, both as a lender and a borrower and influencer.
Yeah, so thank you first for the invitation. Yes, and I will focus on what we do at World Bank Treasury. You know, I will not take the broad World Bank perspective, you know, which is much larger. So at World Bank Treasury, we have a 360 degrees approach of sustainability. As you mentioned, we are an issuer, we are an investor, but also we are an advisor. So let me tell you on the advisory side, and maybe I can tell you also on the issuer side. As an advisor, so we run a program, and here we have some members, which is called the RAM program for Reserve Advisory and Management Partnership. It's a program where we have more than 70 members, and if you look, and mostly central banks, and we help them, you know, with the management of their reserves. And what we do on the sustainability side is that we share with them central bank sustainable investment practices, and we offer them, for example, peers comparison. Something else we do with central banks is that we help them to design sustainable investment policies. So we work on beliefs, you know, ESG beliefs or sustainability beliefs and objectives. You know, we use case study with them, so you know it's very practical. Another example, and you know I can develop further later, but for example, we worked with them on building sustainability-informed strategic asset allocation. You know, how to use economic models like integrated assessment models, how to use NGFS scenarios, because of course you have NGFS scenario available, but how do you use these NGFS scenarios into your reserve management can be a challenge. And of course we are part of the different NGFS work streams. Yeah.
And is this advice that you give to central banks, it reflects also policy in terms of your lending? Would that be fair to say?
No, it's I think you raise a very good point. Yes, there is some consistency between the both, but you know, this is run by different teams because I think it's important to have you know, independence on both sides.
Fair enough.
But As an issuer, I think you mentioned it just to give the big picture to people. I think we are the issuer for IBRD and IDA. We issue roughly 50 billion each year, AAA, very liquid bonds. And we have been a leader in the ESG market. We at World Bank Treasury, we have contributed to increase transparency and defining best practices. I think you mentioned earlier, yes, we were the first green bond issuer in 2008, and and we have with that we created a blueprint for sustainability across markets, and more recently we have taken a holistic approach to label bonds. All the bonds we issue are sustainable.
Yeah.
And we call them sustainable development bonds, and probably we have set up a standard, in the, across the MDBs, the multilateral development banks.
Thank you. And certainly the labelled bonds I know we'll explore elsewhere, and there's a complicated discussion. But essentially, the philosophy of the World Bank, I think, is that if you lend in a sustainable way, your issuance is also sustainable.
Yes, exactly. Yeah, that's exactly the philosophy, and I'm glad to say more. Later.
Okay. Well, perhaps we'll come back to. I don't say it's a standard debate at these events to discuss which is the right approach on that. I wanted to, before we come back to look at real action that can be taken on bank supervision and reserves management and so on, I wanted to go back out to the issue of the relative importance of this area. Chuchi, I think, suggested that actually this is as much a job for government as it is for central banks. Central banks have a very difficult day job at the moment. Simone, perhaps first to you, do you think the net zero imperative is, from the point of view of central banks, subordinated at the moment by the market and economic turmoil? I said at the beginning in my introductory remarks that it isn't being, but maybe it is.
Look, it's a very good question. I mean, for me, no, this heightens the urgency, accelerates our will to manage an orderly transition. I think if you look at the IPC synthesis report, I mean, it highlights issues such as financial inclusion, just transitions, making sure regions that are underserved currently need to be brought into the climate transition adaptation conversation very soon. Here in New Zealand, we are dealing with floods, cyclones, very real problems for some of our regions. So these are very live discussions. So no, I would say now is the hour to really grasp this. We don't have a lot of time, and this is a good opportunity for us to just step in. So yeah, I think we need to avoid locking in our carbon-intensive ways of operating.
Okay. Franca, I mean, you're lucky not to be in Switzerland, but Switzerland has other headaches at the moment. For example, you can imagine this issue being regarded as important but not urgent.
I think it's a good question, but what I can say that is many times we are faced with the dilemma of whether long-term goals should be in some sense sacrificed to solve a short-term situation. And I think we have been experiencing in the last 2 years exactly this situation. On the one hand, the need to continue on the path towards a net zero. On the other side, the current energy crisis and the turmoil on the market and the tragedy of war. Don't forget that with really human and economy damages. Of course, this situation could, I think, hamper the path towards net zero. But I think there is some apparent contradiction for my point.
Right.
Why? Because at first glance, it seems that the current emphasis on energy security could, in some sense, jeopardize the energy transition. That of course we need to tackle climate change.
Or speed it up.
Yeah, okay. But I think it's just an apparent contradiction, because at the end, energy security and the transition are not juxtaposed, but are completely interconnected between. So I think we need to have, I can say, a more long-term horizon, long-term approach. In a sense, we have to isolate ourselves from the turmoil, from the short terms. And I think that when the current energy crisis is faded away, the public policies need to be designed with a clear objective in terms of net zero. Also, in this sense, also the energy price signals that are currently in place could be available in the long run, because and in the long run, I think must be replaced by fiscal signal such as carbon pricing, for example, and taxes, of course. So I think the path to net zero is a mandatory for the humanity.
I think in short, I think you think no, it won't be subordinated by the current problem.
Exactly.
Chuchi, would you agree in the Philippines that this important issue will be pushed aside by urgent issues in the central bank's day job?
Yeah, actually, it's really an important issue, and we're working that as well, of course, with the national governments. So we have this interagency task force that's tackling this climate change. So it's a whole of government approach. And for us in the central bank, our regulations are really largely principles-based, because we deem it to be that the approach to be more flexible and that risk-based as well, since it focuses primarily on the varied risk appetites as well of the banks, to give them flexibility, as well as, of course, dependent on the business models of the bank. But we would like to underscore, again, on the tone from the top. And so on the private sector side, the banks would really be the one driving the net zero transition.
Okay, now I want to come back to them in just a moment. Has anyone got a question so far? Please raise your hand if you do for any of the panelists, and I will get a mic for two. Gary Smith. You don't need to say who you are, because I just have, but please put your question. Thanks, Jess.
Thank you. Eric, I think you said that at the World Bank you use NGFS scenarios to help with managing ramp portfolios. Presumably, the vast majority of the bonds in a ramp portfolio are government bonds. Can you talk a little bit about how NGFS scenarios can impact on a sovereign bond portfolio?
Yeah, sure. And let me be a little bit more precise. We are helping central banks to run NGFS scenario for their own portfolios. But we are doing for ourselves too, but I think most importantly, it's what we do for, in supporting central banks. As you know, there has been the NGFS scenario for some years now, and we had the latest batch, which was, I think, at the end of August, beginning of September, and revised again. I think it was early October and November, because there were some adjustments that were needed. And what is very interesting, if you look at the NGFS scenario, it provides you, if I simplify, 6 scenarios for the next at least 50 years. And the question is, what do you do with these scenarios to see what would be the impact of your fixed income portfolio? And the beauty of these scenarios is that you have interest rate scenarios. So you know what will be the path of interest rates, let's say over the next 10 years under these different climate scenarios. Then it's very easy to come up with what we call capital market assumptions, is that you can build expected returns and expected risks for your portfolios, under these 6 under these 6 climate scenario. It's what we have done with some of our members of the RUM program. We did a research paper on that we presented a few months ago. We have our flagship event, which is a research conference we do with BIS, and we did with Bank of Canada and the Bank of Italy. It was a few months ago, so I will. It's a side discussion, but I will be very glad to share that research paper.
Gary, which portfolios did you mean? Was it central banks are quite big buyers of government bonds, or have been?
Really what I'm driving at is, how do you differentiate between a Bund and a French OAT or a US Treasury or a gilt in terms of these 6 scenarios? And then, how do you manage your benchmark risk? You're inventing a new benchmark effectively, or you're running big basis risk versus
Yeah.
a traditional benchmark. How do you manage this?
Interesting question.
Yeah, the beauty of an NGFS scenario is that you have different paths for both macroeconomic and financial variables for different countries. So then you can really do what you'd like to do, what you mentioned. Now sometimes you may not have all the financial information. I think you were talking about credit risk or spread risk. That may not be an information you get directly, but that's an information you can infer from macroeconomic variables.
Are you suggesting, Gary, that this might oblige uneconomic decisions?
Well, it goes back to your previous question, and maybe the answer that I think Carla gave, that this could be ultimately the economic consideration that we should have over the very long term. But short term, we're going off benchmark, basically. Right. So we are running measurement risks by going down this route. And so how do we bridge across the two?
Okay, thank you. Interesting. I want to come back again to, as I say, to the supervision of banks. I think there's an enormous amount of pressure that can be applied through the financial system from central banks via that. But Simone, we've talked a bit about the NGFS. What are their key work streams at the moment? What's top of the in tray at NGFS?
Thank you, John.
And is it effective?
The
Does it
piece
work?
that we are most involved in is the net zero for central banks. So we're looking there at 3 pieces. So the sustainable and responsible investment for central banks. So helping central banks integrate SRI principles into the management of our own portfolios. Likely to produce some guidance on the back of that work stream, I think towards the end of this year. And the second bit is the central bank's own disclosure, so a little bit about what I talked about that we have started on in New Zealand, so climate-related and environmental risks. And again, based on TCFD, trying to inspire central banks to lead by example and then demonstrate some accountability through our own disclosures. And the last piece is really greening our own corporate operations. So more of a forum to share experiences, methodologies, the challenges that are particular to central banks, like the issues related to resilience of our operations, your payments and settlement systems, in particular currency issuance, whether digital or physical, transition plans for central banks, and then the payment systems pieces that I've mentioned. So those are sort of the 3 heads, and obviously NGFS by its nature is very transparent in what it produces, so any guidance coming out of these will be available to central banks and supervisors and all members. So
Would it be fair to summarise those work streams essentially as leading by example rather than applying pressure in the financial system per se?
That's right. And I think a lot of these emerging mandates, if you like, whether you're looking at disclosure or SRI across portfolios, we need to lead by example. We don't have all the answers. We're sharing a lot between us as regulators and with our industries that we regulate. So absolutely leading by example, but also learning and building capability together.
Okay, thank you, Simon. Chuchi, I've detected, I think, a slight reluctance from central banks so far today to interfere too much in commercial bank business models, perhaps. And I'm wondering why that might be. Why don't you as supervisors lean on the banks more heavily to divest brown assets or to incentivize, actually as the Bank of Hungary was talking about earlier, investment in green assets?
Yeah, I think it can be done in phases, but not outright. That's why at this point there's appear to be a hesitation, but it's not really more of not adhering to that or not contributing or driving the result for the commercial banks. But we're more concerned, of course, on the impact of on their balance sheets as well.
Right.
So it's also on the financial soundness of the institutions. So at this point, we wanted it to be done in phases.
Okay. What do you think about that, Franca? With the ECB's got interesting sustainability policies, including green QE and so forth, but it's also a major supervisor of banks. Should it not lean more heavily on their business models in this regard?
Yes, I think it's about. I'm not an expert of supervision, but looking to the monetary policy consideration, I think the Eurosystem came out in 2022 with the concrete steps in this direction. I think there is a very important caveat on this issue, because
it's more complicated under the surface.
Yes, of course, because the application of a sustainability measure must not impede the achievement of our quantitative targets. It must be very clear, or create a distortion in the bond market.
How are they intentioned?
Of course.
No, but how are they? In what way are they in contradiction?
Seems a contradiction, but I think the climate change and the risk linked with the climate change, they have a risk for financial stability and also for price stability. So I think it's completely internally to our mandate. But I repeat, we can proceed step by step, but with this caveat that our roadmap must be coherent with our quantitative targets, and we have to avoid the distortion in the bond market. So in October, since October 2022, the Eurosystem has titled, as you know very well, the share of its purchases of corporate bonds towards the company, those perform a better climate, that they have a better climate performance. At the same time, we decide to disclosure also our portfolio that is exactly in line with this roadmap. Last February, the Eurosystem, together with the beginning of the partial reinvestment of our policy portfolio, the Eurosystem decides to increase the overweight of purchases of low carbon corporate securities to confirm its commitment. I have my personal opinion. This is a personal opinion. I don't know if it's the opinion of the bank, that we have to pay strong attention about the strategy that we want to implement, not only for monetary policy but also for investment. Because when I hear strategy in terms of exclusion, right, I think there are really very big risks. Which is the risk? The risk is that we cancel some sector of the economy, and it's, I think, a very important risk. So we are trying to help the companies to decarbonize their product, and we have to have available capital for that. And of course we have to help the best in class in this company. So
which the Bank of Hungary was talking about.
In this sense, I think a key point is the transition plan of the company.
Okay, transition. I want to come to you on this, Eric. Obviously, you're not a central bank. I hear a lot of trepidation in this area. So after the Lehman crash, commercial banks had their core capital requirements doubled. There were penalties put on risk weights for securitization and things like that. All pretty hard. There seems to be a lot of hesitation in this area, which you could argue would be less onerous for the commercial banks. What's going on?
Yeah, I think the question is that will there be a Basel IV, that will take into account, all these sustainability questions.
Right.
And probably if it's decided to go in that direction, it probably will solve, many of the issues you mentioned.
Okay. So in other words, you agree with me that they're hesitating and they shouldn't?
No, I think it's exactly the same issue as when you are a reserve manager, is that you have to balance between your investment objectives, where you have liquidity, safety, return on the other side, on one side, and then you want to be sustainable. So how do you balance between two frameworks?
Okay. Implicit in that, Simone, perhaps you might want to comment, or even the Bank of Portugal, perhaps if you'd like to come in as well. Implicit in all of these replies is that there is a tension between an economic investment and a sustainable investment. Would you agree with that? Simone?
In terms of our banking sector,
Yes.
yes, yeah. I mean, it is tricky. I mean, people do point to the risk weightings as a tool to help us accelerate progress in this area, but it is, it can be quite limited for affecting change, and some banks can already incorporate green variables in their assessment, so in their models. So I think, yes, some acceleration would be very helpful, but it's not the only tool. And I can't underestimate the power of disclosure once our institutions are all in a pattern of disclosing what they are doing and how they are investing. That will be very powerful.
Okay, fair enough. We'll move on to or rather back to the labelling of assets topic briefly. I'm sure we'll talk about that again throughout the conference. Perhaps back to you then quickly at the World Bank. Perhaps we can go into more detail about whether it's important for the investment community at large to do due diligence on every single issuer to decide whether they're sustainable or not, or we should develop an ecosystem of labels that will save them the work. Which is the better approach and why?
Yeah, I can tell you, what has been our approach, at World Bank Treasury. We have this holistic approach where, all the bonds we issue are sustainable development bonds. And how we do that is that we link them, to all the projects for which, we land, at the bank, the World Bank. So, in a sense, that answers part of your question. Now, another way to answer that is that, yes, we believe in labeled bonds, and we have done many innovations recently, in that direction. So, for example, I don't know if you have seen it, but we issued the first wildlife conservation bonds in 2022, where we connect wildlife protection outcomes in South Africa and performance. Another one we did just recently, we have done an emission reduction linked bond in earlier this year to help finance water purifiers for schools in Vietnam. Another one, also on top of that, and something we have done for some time now, and it helps to address physical risk, and especially chronic and acute physical risks. We have been working on cat bonds to provide insurance against natural disaster. And in few countries, there are Jamaica, Philippines, and Mexico.
Okay. Chuchi, in your reserves management team, in as much as you know, would they be happy to buy a World Bank bond? I don't know if they do, but if they did, would they be happy to buy it on the basis that the issuer is sustainable rather than the labeled bond?
Yeah, actually, for the BSP Treasury, we've started already some considerations as to sustainability matters. So Actually, we started in 2019 to invest in the Green Bond Fund managed by the Bank for International Settlements, or the BIS. And then our investments there have grown actually now to around $550 million. And we believe that apart from advancing our sustainability initiative, green bonds provide also higher returns
Yep.
and diversification for our portfolio. So there are, of course, diversification benefits to that for our foreign exchange reserves. And also in February of 2022, that's last year, we also invested in the Asian Green Bond Fund, which helps to channel funds to green projects in the Asia-Pacific region.
Okay.
So we are reviewing actually also our strategic allocation of investments with the end view of course, further aligning with our sustainability objectives. In fact, our Treasury is working towards becoming a signatory of the UN Principles for Responsible Investment.
Right.
And is considering the development and adoption, of course, of a responsible investment charter.
Okay, thank. That's very helpful.
Something on the green bonds.
Yes, I'll come right back to you in just a sec, but I'll come right back to you. Simon, just from the point of view of your own investments, reserves and elsewhere, pensions maybe, do you take the approach of buying labelled bonds, or do you do due diligence on the issuer as a sustainable issuer?
Like I can't speak to the actual strategies myself, but certainly very similar to our previous panelists, that we're at the quite early stages of looking at our strategic asset allocation across our portfolio, and making sure that we can meet our policy and liquidity requirements. But obviously realizing the world is changing, the range of investments is changing rapidly, and we need to move with this. So again, yeah, quite early stages, but the team is really committed to making some progress on this in the coming year.
Okay, thanks very much, Simon. Please.
Yes, just a few words about the green bond portfolio, because we decided to use this strategy in our reserve management. I think it's a good alternative and possible.
Which strategy?
The strategy to buy a green bond, respect to use in the investment decision for Govi.
Right.
Yeah, it's exactly what I would like to say.
Yeah.
Could be a good alternative to, in some sense, overcome the problems linked with the government that many times during this panel appeared, because don't forget that the government bond is a very important, in our case, is the largest share of our own funds.
Right.
But I think it's normal, because if you think the function of a government bond for the implementation of monetary policy, for financial stability, and the other institutional function of the central bank, I think it's really very, very difficult to say that we can apply strategy as a best in class that we can easier apply for the stock, for equities, for corporate bond. But I really see a great difficulty to apply to government bond. The problem for green bonds, according to our experience, that is difficult to find green bonds in the market.
Right.
This is another problem.
Which will make them uneconomic as well.
Yes, because I think also talking with our Minister of the Treasury, Republic of Italy issues its first green bond in 2021. Up to now, the Republic of Italy issued just only two issues. The problem is the management of this revenue, because the green bond, the standard of a green bond, in some sense, put many constraints for the using of these funds, and so I think for the Treasury around the world, it's very difficult to issue green bonds. So according to our experience, it's difficult to find government green bond with the level of credit risk current with our limits. It is our experience.
Okay, so you, just to simplify a little, you wouldn't regard an Italian government bond as a green asset unless it said it was green?
Yes, in this sense, yes, because of course, in the European market, the leader of a green bond is Republic of France. It's France. Italy started, I said before, not so far, just 2 years ago. Probably one possible new market for government in the future could be sustainable bond with respect to green bond, because probably it's much easier to manage.
Yeah,
you know.
I'm sure we'll definitely talk about that more over the course of the conference. We're soon out of time, but I want to ask the audience if you've got any more questions that you'd like to put. You'd be very welcome. We've got a couple of questions. So, Amy, here first, please. If you could say where you're from and put your question. Thank you very much.
Absolutely. Hi, I'm Emily Homer from Robeco Asset Management. What struck me throughout the discussion, and John, you pointed to this, is, you know, you're doing a lot, but it's now 2023, and the Paris Agreement was in 2015, so that's now 8 years on, and it still sounds like you're very much working through your asset allocation, working through supervision of banks. And so my question to all the panelists really is, what is needed to accelerate the work that you're doing so that you do remain leaders and the financial sector can follow central banks?
Why don't we, Simone, perhaps we'll start with you. So back to the leading by example theme.
Yeah, look, and it is a great challenge. We are well aware that we have catch up to do. We're bringing our banks and regulated entities, insurers, etc., along as quick as we can. So in New Zealand, we now have legislative mandated disclosures based on TCFD, and they came in January. We do think that will accelerate our progress on adaptation, mitigation, transition plans for our entities. So I am hoping we'll see some real progress this year. We are also seeing, as you are all experiencing, more frequent severe weather events. So this is also sharpening the minds of our policymakers here in New Zealand. We know we all have to act quickly, so I'm hoping we will see a lot of progress in the coming months. But thank you for the challenge.
Thank you. And that comes back to the theme that we're concentrating here on the supply of information most of all, rather than economic decisions by the central banks per se, I think. But there was a question at the back.
Thanks. Thanks, John. Jahangir Acker from Neuberger Berman.
Yeah.
One of the things that BlackRock has experienced in the US is being bashed by the political system for assuming that they had the right to come up with a definition. So John, you've been referring to labeling. The problem is not everyone agrees on what the label is. So there are different definitions of it. How do you feel you can create enforcement action of any form when this ends up becoming a political movement? How do you deal with that element of it?
Excellent question. We might start with the World Bank on that one.
Thank you.
And I'm not going to say why, but maybe it sounds like some people are guessing.
No, thank you for giving me that difficult question.
Yeah, my great pleasure. But it looks like your institution is responding to exactly this issue. That's why I'm putting the question to you.
Yes. Again, I just can talk about what we do. For example, on the issuance side, and it's related to what we do with our counterparts. And how we work with others, how we cooperate with others. So, for example, we do a lot of cooperation with investors, to develop best practices, to improve transparency. We work a lot with reporting entities internally. And sorry, I will use many acronyms again, but they are quite well known, I suppose. We work with GRI, with CDP, with TCFD. Also, we work a lot with on both the issuing side and the investment side / advisory. We work a lot with ESG scores company and looking at either convergence or not. What are the differences? We did a study a few years ago where we look at the ratings, the ESG scores at sovereign level. From the different rating agencies, and we could find that a lot of information was publicly available already. So I think it's more about harmonization. It's more about, you know, collaborating. Frankly, we are at the beginning of the journey. So I think that's why your question is very tricky.
I mean, the question is essentially, is this issue still too politicized to make financial decisions as a global asset manager, for example?
Alors, something we discuss with our members, our RAMP members, is that because you're talking about the political aspect.
Yes.
If we make an advisory with, you know, let's say different central banks from different countries, what sustainability means can be very different across countries.
Yeah.
And it's where, you know, we used to have this concept of investment beliefs, and now we have this concept of sustainability beliefs. And it's more about, you know, how to extract these sustainability beliefs.
In the Philippines, how does it look there? So the question is whether this issue remains too political to make a neutral policy on it for financial institutions, which is true in the States to an extent for reasons that we can go into. But how does that look in the Philippines?
Yeah, in the Philippines, we have this, what we call as the Financial Sector Forum. So it's composed of the different regulators. There's the BSPs, the central bank there, of course, and the Securities and Exchange Commission, the Insurance Commission, as co-regulators. So we're working on a taxonomy and to harmonize as well the regulations from insurance to the capital markets and to the banks. But I think from a supervisory standpoint, quote unquote, the label market as a starting point would provide as a baseline which can serve as a guide for investors. So I think moving on from there would be something that can be as well maybe globally be adapted, but on a per jurisdiction basis, it would be good for a uniform way of treatments. That's why taxonomy for a jurisdiction is important, and that can be connected as well with the other in the other jurisdictions in the region and globally as well.
Okay, Jenga, does that answer your question?
I think we've got lots of work to do.
Yes.
Yeah,
Okay.
definitely.
I think that's probably right. We're out of time, and you're well overdue coffee, tea, and Danish pastries. So thank you very much. It sounds to me like it reminds me a little bit of the central bank digital currency discussion, where there's some excellent papers and lots of very useful conversations, but not everyone's quite ready to act just yet, I dare say. But extremely useful conversation. I'm very grateful to the panelists for taking the time to talk to us and talk about their own jurisdictions. So thank you very much, everyone. Enjoy the coffee and tea, and do come back, Emma, in 15 minutes for your panel on an orderly transition. 25 minutes. See you in a moment. Thank you very much, everyone. Thank you. Bye-bye.
Thank you.